bigger example, uh, why Mukesh Ambani is holding Reliance company ka shares? Do you know Reliance shares were at a stagnant at the same level from 2008 till 2017 at around 700 to 900 rupees a share. The share price of Reliance Industries did not move from 700 to 900 for 10 long years. In spite of that, Mukesh Ambani was invested into that. He was the promoter. He was invested into that. Why remain invested into that? Because it is his business. He knew what is going to happen, how he has invested into Reliance Retail, what he has invested into Reliance Jio, and now that is going to pay the returns after maybe 10 long years. So he was ready to wait. And now you see the company is the biggest company of India. So you need to have patience. 1 year is not a long-term deal. You should not invest into equity for 1 year horizon. It is very, very risky. You might lose the capital. And who was the second person who said he wants to invest for 2 years? That is also a small period. If you are investing into equity, invest for minimum 5 to 7 years. Why I'm saying 5 to 7 years? Generally, in 5 to 7 years, there is one cycle of bull market and bear market goes, and then you may get a normalized returns. In last 2 years, most of you who have opened Demat account have only saw the upside of the market. You haven't seen the downside. So that is why you are thinking short term that I will make the money, I will get out. But if you remain invested for 10 years or 15 years, 20 years, you will make the big money. And that big money is going to make a difference to your life. Not the short money or for which is invested for 1 year or something. It won't make any difference to your life. So that is why I will come to the last aspect, which is very important for investors like you and me, or rather every investor. That is a behavioral aspect of an equity asset class. Just it is a very important part of our presentation. Just go through that. There are few simple truths and rules which investors tend to forget. One thing is equity investment is boring. Why I am saying boring? Just now you saw, if you want to select any stock, you need to go through a process of shortlisting a stock. It is not just ki, one of your friends says ki, invest into this stock A, it is going to hit the roof, or it is going to get doubled in 2 months. The stock which went double in 2 months, it might go down to 10% of its value within no time, and you won't come to know. So if you really want to invest into equity, you need to study the companies. And then obviously that is a study, means it is a boring. So equity investment is a boring thing. You need to put in efforts to find out the right kind of investment for you. What is the second thing? Understanding the power of compounding early in life is very important. You know the investment guru, Warren Buffett? Have you heard of him? The richest person on the earth? Warren Buffett, do you know Warren Buffett when he started investing? Has anybody got any idea when he started investing
at the age of
into
11.
equity market? Yes. So he started at the age of 11. And now at the age of, I think, 80, 90, he is the richest person on the earth. But do you know what the 95% of his wealth, 95% of his wealth, what he has today, he was generated when he was at the age of 60 to 65. So why that happened? Because of the compounding. He started early, he remained invested. So that is why at the age of 60, 65, he earned almost 95% of the wealth. For initial part of though his investments were growing, but not to that rate. Why the investment raised or why the value has increased? It is because of the power of compounding. And for that power of compounding magic to happen, you need to invest early and you need to remain invested. So third point, as I said, equity asset class is for big money. What I was saying to Chinmay, it is for a big money, that is wealth creation, and it is not for the fast money. Don't have a trading mentality. Just assume if the trading would have made you rich, everybody, why Mukesh Ambani is running that big refinery at Jamnagar? Why is having the biggest Jio network? Why is running the Reliance retail stores? He would not have run those businesses. He would have just had a trading terminal at Reliance Corporate Park or Dhirubhai Ambani Knowledge City, and he would have employed thousands or lakhs of traders in his office to make the money. Is he doing that? No, he is running the business. Because through equity, you can make big money, you can create wealth by investing into equity, not by doing the trading. Not by doing that everyday trading. सुबह उठ के देखने का CNBC पे प्राइस क्या है, फिर बाय करने का, शाम को सेल करने का, दोस्तों से गप्पे मारने का, ये लिया इसमें, वो बेचा उसमें, उससे you won't create wealth. Take my word. It will bring us to fourth point. Equity is about patience, discipline, and conviction. If you are buying good business, you should have patience to hold that company ka shares. You should have discipline to invest regularly. And to have patience and discipline, first and foremost, you should have a conviction. What conviction? That equity as an asset class will help me give a big money. By doing investment into fixed deposits, by doing investment into RDs, by doing investment into life insurance policies, you won't make money. You will spend the money, it will grow at a rate equal to the inflation, but you won't be able to beat the markets. So, to have the inflation beating returns, you need to invest into equity, and that too for a longer term, for a longer duration. For that, you need to have discipline. And why most investors fail in equity? Most investors fail in equity not because of the markets, but because they think they are too smart. I'll give you one example. Petronet LNG, you must have heard of the company Petronet LNG. It is a company which is doing business into liquefied natural gas. That company got listed in 2004. I'm giving example of myself. I also used to do not trading per se, but I also used to hold the shares for a short duration of maybe 3-6 months. That time when the IPO came, the company ka share price was 15 rupees. So I had bought around 100 shares at that time for 15 rupees. 100 or 1000, I believe. 15,000 rupees I invested at 15 rupees per share. Suddenly, after listing, that share went to 18 rupees in 3-4 months. So it was a 20% profit. I said, Areva, within a month or two, I am getting 3,000 rupees on my 15,000 investment. I sold the shares at 18 rupees. Subsequently, I rebought it. But now, after 17-18 years, today the company ka share price is, you can check out Petronet LNG ka share price. It is around 230 rupees. And that 230 rupees is also after giving a bonus of 1:1 share. So actually, that company ka share price is now 560 rupees. The 1000 shares, if I would have held at that time, would have grown some 300%. 300 or rather 3000%. But at that time, I also did not have the knowledge. And there was nobody to guide me as well at that time. So I was also into making the fast money. At 3,000 rupees on 15,000, I was very happy. But I did not recognize the potential. If the LNG company is good, it was a monopoly at that time. Petronet LNG was a single company which was dealing into the liquefied natural gas. They had a terminal at, I think, in Gujarat. So that was the first company started at that time. So if I would have studied that company, I would have remained invested. And I would have got a big money through the share appreciation and the dividends over a period of time, last 15, 17 years. So that is why. So generally what we think, we are very smart, nobody knew I earned 30% return in 2-3 months. What we generally do, whatever we earn, we spend it. And again, we start from zero. So as against that, follow your gut feeling, have a patience, have a discipline, and keep on investing. Keep your emotions and mind in equanimity during the market fluctuations for wealth creation. Again, the last point is also very important. Whatever we are thinking, we are only thinking of the bull market. We are thinking that our market is going up and surely our money will multiply and we will make a lot of money. But if there is sudden drop in the share price, sudden drop in the Sensex, then our confidence gets hit. And then we start thinking of the negative things. अरे now तो कोरोना का थर्ड वेव आ गया, अभी ओमिक्रॉन आ गया, अभी आगे जाके डेल्टा भी वापस आएगा, and now it is not going to improve. Just if you remember in March 2020, when the corona hit and the market went down from 42 to 26, did anybody thought within 2 years the market will go down beyond 2.5 times? Nobody was thinking. Everybody was thinking this virus is going to remain there for 1 or 2 years, and people started selling their investments. Even though they did not require that money, they started selling the investment because they thought now the situation is not going to improve. Even though company ka fundamentals were good, all the big companies like TCS, Reliance, Infosys, people started selling the shares for no reason. Even though they were not requiring that money at that point of time, they started selling the shares because they saw the value of 1 lakh going down to 30,000 or 40,000 within no time. So that is why you need to keep your emotions in control during the market fluctuation. Then only you can make the wealth. That is why many times I tell my clients, if you want to see your 100 rupees growing to 200 rupees, first be ready to see that 100 rupees becoming 50 rupees. If you can digest that, then only invest into equity. When you are investing into equity, you should be ready to bear the losses, or rather you should be ready to see the valuation of your investment going down. If you can stomach that, then only you can enjoy the fruits of 100 rupees becoming 200, 500 in future. But many times people come to stock market thinking that my 100 rupees will become 500 or 1000, but the moment that 100 rupees become 80 or 70, they become impatient. They see, अरे नहीं बाबा वहाँ पे ये तो 30 रुपीज का लॉस हो गया, उससे अच्छा तो मेरा बैंक एफडी या वो अच्छा है जिसमें 6% तो मिलता है guaranteed. But in long term, that guaranteed money won't help you. After this, I will show you a few pictures, which pictures were 1,000 words, as I have titled it. If you see, these pictures are by Carl Richards. He is one of very well-known person. Through sketches, he has shown how the investment and the investor returns vary. So if you see lifetime return, so what is a lifetime return? Overall return that you receive on your investment is nothing but the investment return plus the square of investor behavior. So if you see in investment journey, now the 5% contribution is by the selection of stocks and all those things. The 95% of the returns are generated by you and your behavior. So that is a lifetime return is nothing but investment return, but it is square of investor behavior. If the investor behavior is not proper, if investor is very impatient and very impulsive, then his return will get affected. Even though his investment might generate a good return, means a stock might generate a good return, but the person who is invested into that stock may not make a good return because he will exit midway. It is second picture. It is again same thing. What is investment return and what is the investor return? And the difference between that is behavior gap. What does it mean? I will give you an example of Reliance Growth, a mutual fund, Reliance Growth Fund. Now it is called as Nippon Growth Fund. That fund started in 1995 at the rate of 10 rupees. Any mutual fund, when it starts at the rate of 10 rupees. So NAV of that mutual fund was 10 rupee when it started in, I think, 1995, October, November something. That 10 rupee NAV was at the same level, almost same level, 8, 9, 11, 12 for next 4-5 years. Now come down to yesterday, or rather 14th. On 14th July, rather on 14th January 2022, the NAV of that fund is, you won't believe, it is at 2,150 rupees. The 10 rupee NAV has grown to 2,150. But who got that benefit? The only investor who remained invested from 1995 till 2022. What happened? Many investors, since the fund wasn't performing for 4-5 years, they exited from it. That too at a loss or very minimal profit. So that is why the behavior gap plays a major role. Even though the investment or the fund or the stock might generate good return, but if the investor is impatient, then he won't get that much return. That is why you must have heard many stories. You must have heard from many equity gives good returns, but your family members' experience might not be same. They will say that equity is a satta. Why? Because people come to equity market with short-term thinking. I will make a quick money and then I will exit. And that making a quick money is very difficult. And that is why, even though the stock market is, I'm saying the stock market or Sensex has given 16% annualized return, but all the investors might not have got the same returns because they did not remain invested. That is what is making a difference. Again, I think it is the last picture. If you see the study which was made by Axis Mutual Fund from 2009 till 2019, it is a 10 years ka data. Again, same thing. The equity funds, equity mutual funds, the funds have given 18.8% annualized return. But how much the average investor has got? It is only 12.5%. The difference between the fund performance and the investor ka returns is almost 6%. Same with hybrid fund. Hybrid funds means mix of equity and debt. There also the fund has given 13% return, but the investor has got only 9% return. The 3% difference is there because of the investor exiting midway, entering at a high, and then remaining invested for some point of time, during which market went down, he exited. Even though after that the fund went up. But since the investor exited midway, he booked losses. In debt also, the returns are, in debt you don't see much of a difference. Fund returns are 7.8 and investor returns are 7.4 because in debt funds, the volatility is less. Because the volatility is less, the difference in returns is very less. As against that in hybrid and equity, since the returns are not in linear fashion, that is why the investor ka entry and exit matters in generating his returns. Again, this is the last picture. Yeah, this is the last picture. What does it show? If you see, in 5 years, the stock market has gone up. Today it is 22. In 2017, I believe it was somewhere at around 30-35,000. So in last 5 years, the 5 year before ka figure of 30-35,000 and today's figure of 61,000, if you connect, it will be a straight line going upwards. But if I ask you last 5 days ka Sensex ka graph, it will be very, very volatile, like a ECG. So do you want to have a vision of 5 days or do you want to see the longer picture? If you see a shorter picture of 5 days, 1 month, 6 months, 1 year, Chinmay was saying 1 year. So if you see a 1 year picture, it will always show you a graph like a 5 days ka graph. and that will make you vary whether to invest or not, whether to invest today or not, or should I wait, should I invest after 5 days, or should I invest after 6 months after the budget. Many people might be waiting for budget to come out, so that they will decide ki after budget what happens, and then let us decide ki whether to invest or not. So that is a very short term horizon. So in short term, the graph of stock market will always be like this.